US stocks fluctuated widely. Later on, the US stock market saw a strong upward reversal. Thus, its downtrend was broken. After a rather chaotic trading session on Thursday caused by Russia's invasion of Ukraine, as well as sanctions imposed by the European Union and United States against the Kremlin, major US indexes posted strong gains. Thus, the NASDAQ Composite turned its loss into a 3.3% gain. The S&P 500 closed 1.5% higher, while the Dow Jones showed a modest rise of 0.3%. Notably, yesterday in early trade, the US stock market suffered huge losses as investors reacted negatively to global instability and the high inflation. However, after Joe Biden unveiled harsh new sanctions on Russia, stock markets corrected, made a bullish reversal and continued to trade upwards until the very close of trading. Probably investors believe that the military conflict would not go beyond Ukraine, and this means the war would not affect other European countries. In the meantime, the benchmark S&P 500 is still green and is currently moving at around 4,299 points. Today, the index is expected to trade within a range between the levels of 4,250 and 4,330. In fact, the US Fed Reserve's monetary policy and market expectations of interest rate hikes continue to drive the market. This, in turn, buyers the greenback's appeal as a safe haven asset. The euro, on the contrary, has been declining for the third session in a row on the back of strong demand for the US dollar. Through yesterday, the US dollar index measuring the value of the dollar against a basket of 6 world currencies, as well as the entire US market showed strong fluctuations. In early trade, the index saw steep gains and hit a new one-year high at 97.70. Then it pulled back and started to trade sideways in anticipation of news. Today, investors still prefer not to take risks, especially amid the escalating situation in Ukraine. Thus, USDX once again rose above 97.00, but then fell to the level of 96.86. Currently, it's trading in the range of 96.77 and 97.22. In addition, fears of inflation and further interest rate increases got quite widely additional grounds. The Fed's preferred inflation gauge that has been released today is still high. Thus, consumer spending was up 2.1% after a decline of 0.8%. While the focus of market participants is on the situation in Europe, the US dollar is gaining value. Some economists assume that this week the US dollar index may jump to 97.70, its highest level since June 2020. Other experts believe that oil prices could surge $230 per barrel amid the situation in Ukraine and a risk of oil supply cuts. Although the dollar index itself remains green, the US dollar-Canadian dollar pair is losing ground. According to the chart, the pair has already slid to the 1.2763 mark. Given the current market uncertainty, the trend may well change within the range where the levels of 1.2860 and 1.2700 act as a resistance and support respectively. The crypto market also reacts to incoming news about the situation in Ukraine, while politicians decide whether to cut Russia off from the SWIFT global interbank payment system or wait. Flex Pool, one of the largest cryptocurrency mining pools, announced that it's canceling all services to Russian IP addresses due to the invasion of Ukraine. Meanwhile, Come Back Alive, a Ukrainian non-governmental organization that raises crypto funds for the Ukrainian army, has received more than $400,000 worth of digital tokens in the past day. Notably, a few days ago, the Ukrainian Rada parliament passed a bill legalization cryptocurrencies in the country. Ukrainians also shifted their focus to cryptocurrencies in order to protect themselves from devaluation. In the meantime, Bitcoin added 11.6% to $39,535 per token. As the result, the Bitcoin exceeded the 38,000 mark for the first time in more than a week. Yesterday, the first cryptocurrency fell below 35,000. Today, the digital currency is trading within a range of 38,121 and $39,373 and is likely to continue its bullish run. Well, that's the forecast for the last trading day of this week. We hope you have managed to make a profit. If you have any questions, please post them in the comments below. Take care and trade prudently. Have a nice weekend and see you on Monday.